Welcome back, everyone. Today is the 1 year edition of the starting of this series, and on that occasion, I decided this is going to be the last week of picks in the weekly format. I may continue that in some form, but be sure to check out at the end where I look through the portfolio and make some commentary on the past year. So there's the normal stuff and that. So let's get to it. So before I begin this week, I just wanted to put a quick message out there, and that is thank you everyone for sticking with me. I'm very appreciative of all my subscribers. There's some that have made some commentary along the way, suggestions or this or that, and I read everything and I put take your input. Now, as I said, this will be the last video with the weekly picks, as it is. It makes things take longer, and I don't really enjoy it in this format. So I might continue doing something similar in a less often, less frequent format, just because there's a lot of, uh, I don't know, it feels there's a bit of pressure for each week to pick the right things when sometimes there's just not anything you feel like buying in a particular week, aside from, just adding to the portfolio, and it just feels forced. That's why that is ending. Um, and the only other thing about the channel that I wanted to put forward here is that in the coming week, probably I'm planning on doing it on the 31st, which is the 1 year anniversary of the channel, technically, a video discussing the future of the channel, what I plan on doing, what I'm thinking of, and I would really like some commentary and input on that. So if you like some of the stuff I do, if you find this stuff I do on this channel interesting, I'd suggest checking that out to see what I'm thinking and comment on that. Now on to markets, where this week, again, we're going to start with the US dollar. Now, over the past week, the US dollar has bounced slowly but stably off its lows. Um, Now, this week again is interesting because there's the Fed meeting on the 30th, well, 29th, 30th, with which they will give their announcement of what they were doing on the 30th. Now, the market is expecting a rate cuts with the markets at all-time highs, and because why not at this point? And what will really be worth watching is what they say on the status of this not QE and the repo operations, which by the way have been expanded from 75 million to over 120 million. Now again, this is not the repo is not cumulative. It is one night, then the next night the same money theoretically. So it's not a super QE. Uh, but we'll have to see what the Fed says and how the market reacts. On the how the market reacts part, just a reminder that the last few cuts have been hawkish cuts, I would say, because they cut but also said that, well, we'll see how it goes. This may be the last cut. Yeah, okay. And the market was very unhappy with that again. So it then proceeded to forget in a day or two or a week, whatever. But the point is, they are expected to cut again, and for the first time this time, I think that there's a case to be made for what like if they cut, that there's maybe a case to be made that there might be some green shoots, and so they might not have to cut again. But, they've been saying that so often that who knows if A, the market believes it, B, if it's right, could be wrong. I could be wrong. And so that's the big thing to watch of this week on the 30th. with regards to the dollar. This has almost become a running joke at this point. It's been a month more, maybe, I don't know, with all the moves in gold and talking one direction, the other, dollar up, dollar down, whatever. Still consolidating around 1500, and that is almost all I'll say this week. The only other thing is it may be something changed in the past week where it looks like the gold equities, so the miners, for example, may have taken the lead in terms of the move. So if this is the real uh, potential breakout to the upside, the miners taking the lead would be bullish. Again, if this is the real time. But for now, just consolidating. On the uranium front, I've been increasingly vocal on publicly about uranium over the past year. Before that, didn't really talk much about it publicly. But now, more recently that is, I'm starting to see some frustration. I don't know if that's a sign of capitulation or not, but the frustration to me is logical. Because if you look out, there was 232 as a catalyst, and then there was just after 232, the price is supposed to move. But now you kind of look out, and yeah, there's some little things, but there's no major catalyst that everyone can agree on. Once you have that, plus the equity is going lower, and probably there's a good number of people that don't really understand how the buying for uranium works differently, in that the utilities under buy what they need and destock inventories until they decide to flip that and buy what they need. And so if that wasn't the case, no catalyst to take the price higher would be, well, defeat. But in the face of all this, you see some quitting, and that you see some explorers that are buying projects in different commodities to maybe diversify. Maybe they can't get money for uranium, and maybe they can't run their company. And then you just see some of the bigger companies, even like Paladin and Fission, that have been struggling. And these are good deposits, good big deposits, and they can't seem to get money. And then you add to that, all around the space, there's large G&A burns and the fear of, if not the fact of, tax loss selling. And the frustration is completely natural. And like, I can see it. I can see that many people, the tone has changed. And, you know, the, the cyclicality of the resource space, uranium and others, means that some stupid prices for some equities can get stupider. And the reason that the buying has to be segmented is because sometimes a company will have to get more money at a stupider price and issue some shares. And that can be a great opportunity, or it can really, really hurt the investors that were just a bit early. And it sucks, but it happens. Okay, so on to base metals and oil. So I mentioned before that this time I think the Fed might have a point if they do their traditional hawkish cut. Now, I'm not saying everything's super rosy, but when you look at oil and copper and zinc and whatever, you can kind of see, I called it green shoots, but the prices look stronger than they have recently. And I mentioned that last week, and that they are significantly less sure about economic weakness than they did a while ago. And the prices keep moving up. You look at copper, zinc, oil, and they're off their lows, and some are actually moving higher. Now, maybe this is just a sign of inflation, and there is signs that inflation is picking up or off of its trough. Now, the question is, will there be signs of growth also, or is it just inflation? That's a big one, big question. I don't know yet. So on the shipping space, it's another week of consolidation. Now, the prices are well off their highs in many aspects, but the interesting thing is that at these fixture rates, the companies are, well, in the crude and finished products at least, are very profitable. And if you look at what their price to earnings would be in this environment, you can find many companies trading at like 2 or lower. And this is a reminder, this is before the brunt of IMO 2020 kicks in. So this, as I said to some people who asked some questions, I still like shipping, but it could be a wild ride. Okay, and the last picks for the week and the weekly series at least are NextGen, Altius, and Lucara. Now these are three fantastically run companies. Two of them have world-class deposits in their field. And then there's Altius, which has fantastic management. They have some royalties on some fantastic deposits, various commodities throughout the world. And so realistically, all three of these, I don't know if they go lower. They all could. And but realistically, all three of these companies are, in my view, going to be not only survivors, but strivers in the resource space. And that is why each of them is picked this week. Solid. And that being said, all could go lower, but these are the picks. Now, I went back through the 12 weeks, and with the exception of the financings, this is what the portfolio looks like after 1 year. Now, down 4.76%. Not great, not good. Um, yes, we invest for the long term, but if we can have better prices on things, then we should try to do that. And this is not fantastic. I'll get into some specifics just in a sec, but here if you wanted to look at what we did over the past year. So in terms of general commentary, down 4.76% before warrants, financings, and dividends. Not good. I'm not going to make any excuses. Um, shouldn't have been in so heavily in the resource space. And yes, ironically, quite ironically, for me, I find at least, um, looking at the specifics, we're probably too heavily weighted in uranium. Now, do I not think that uranium is going to do great down the stretch? That's completely wrong. I do think that it will be top performer, maybe next year, maybe the year after, maybe both. But for this year, we were wrong. Early, wrong, same thing. Um, so yeah, now I'll break down the winners and losers. So one thing is for certain about this portfolio in this year, it was a volatile year. There was not a uniform, everything's down 4%. No, there were some big winners and some big losers. On the winner side, we had Bed Bath and Beyond and Liberty Gold. Unfortunately, they were both smaller positions, but they were both up 79%. We then had the contingent of gold stocks, Equinox, Leagold, Sandstorm, and Argonaut up between 57 and 44%. So that was decent. Well, more than decent, that was pretty good. On the flip side, uranium was pretty bad, but yeah. And then Genko was up almost 27.8%. There's a number of between the winners and losers up, up 10% to down 10%. Relatively flat compared to everything else. I still think a number of them are cheap and have room to run. Same thing with some of the losers, frankly, but they are losers. And we'll start with the Cameco calls that I bought in Uranium Week. You can look back to what I said when I bought them. I'm not going to dwell on that here, but they are down 71%. And again, those have the potential for 100% loss, as I mentioned. Calls do that. Next, Plateau down 64.8%. Now that is, again, excluding the financing, which might bring that down a little bit and get the warrants, but whatever. Still down, big loss. Not a year for uranium, not a year for lithium. Bought too high and then got some unfortunate news. Now, is that definitely over? No, there's still a lot of potential there, and that. Paladin down near 50%. Most of that is recent. We bought it recent again, along with the Liberty Gold. We bought that once, unfortunately. But yeah, it's down a lot, and it's uranium, pure play. It hurts. Same thing with Laramide, down 45.1%, minus the financing and the warrants that come with that, but that's not neither here nor there. Lucara. Okay, so Lucara down 25%. Not good. But I think that this one, yeah, we got in early, and yeah, we were wrong about how high we got in. But I still think it's incredibly cheap, and it's a cash flowing company, pays a big dividend. That's why I've been adding to it again recently. I don't know why I put my blinders on it for a while, kind of waiting for it to fall and stop falling, I guess. So there's that. I'm still a buyer of that one, along with some others of these on the loser side. Then we have GoVX and UEC, both down 15 to 17%. Uranium pure plays. Again, uranium got hit. We're still buyers of uranium, but it sucks to be down on a position and not have any big new thing to show for it. Maybe they've bought something, not really here. So the point is, some winners, some losers. I think the losers just got cheaper, many of them, and so we're still buying uranium, Lucara, and we'll see. We'll see what it looks like in a few years. So before I get into the kind of nuanced, kind of flat section of the portfolio, while examining this, noticed that what worked this past year, well, gold did well, shipping did well, but the one thing kind of surprising, but kind of not really surprising, is in general, cash flow seemed to do better than not cash flow. That being said, most of the uranium stuff is speculative and has no cash flow or was options, all of that. Maybe I'm just generalizing because all of that was kind of uranium, and uranium didn't have a good year. And so, I mean, equities didn't have a good year. I'll take the fundamental year any year. Sorry for the repetition there. But anyway, that's what worked, what didn't in general. And a quick run through of some of the points on the meh, nuanced little move, but nothing major yet portion of the portfolio. On the positive side, Norlisk nickel 10%, Scorpio 14, Trevally 3, and Chorus 1. Norlisk pays a big dividend, so holding it up 10% or even flat is, completely fine with me. Scorpio, I still think that the tanker space is a positive space. We continued buying that as it ran up, so numbers are less good than what they should have been. But yeah, still positive there. Trevally, that's basically flat. This thing moves half a cent a day, so like, it's up 3%, down 3%. You know, it's a nothing. Chorus is that one bugs me. I was up a good chunk of that, and I was thinking, you know what, we could remove some of the position, put it elsewhere, and that was right at the top. And we should have trimmed, but we didn't. And now it's back to basically flat. Again, pays a dividend. Again, quality brands, but that's annoying. And on the downside, the three bigger uranium things being Denison, NextGen, and the Cameco calls, I mean, they're down. They're down. There's no excuses for that. But like, again, those things move a lot per day. I mean, maybe not 10% of Denison, but Cameco calls move a lot. So we'll see in 2022 what that looks like. That's still a ways off, isn't it? And aside from that, Verde down 5%, basically flat. And Altius, yeah, that thing won't move that much, but if it moves down 50%, it's a screaming buy, I think, and I would be screaming and buying. But as of where it is here, it's cheap, but not crazy cheap, but still like it. Again, down 1% on that. So what? Moves more than that a day. So that's it for the picks throughout the year, and yeah, I'll do some sporadic updates on what the portfolio looks like, but not many, because I think trimming it down to short term and looking at it too often probably doesn't do any good. So that's that. So that is all for the week and for the year in this series. I hope you liked the little refresher run through of the of the picks in the portfolio over the year. That did take a bit of extra time, but it was fun. It was fun looking at everything that happened and where we went right, where we went horribly wrong. And, so keep going forward. The channel will continue with a number of things. Again, probably 31st is when I will go with a what's going on video. And so for today, hope you enjoyed and good luck in the markets. As always, everyone, please do your own research before making any investment decisions. This channel shall not be liable for any losses incurred from investment decisions made as a result of information obtained on this channel. Good luck with your investments. I'll catch you next time.